The economy is showing signs of improvement. Consumer confidence is on the rise, and there's been significant job growth. Is now the time to reevaluate our investment and retirement plans? That's the question. Well, here to tell us more about investment and retirement planning is Andrew Wigzell, a financial planner at Barnum Financial Group. Welcome back, Andrew. Great to have you.
Good to be back.
So, in the news, we've been hearing a lot about this particular word. It's the uptick. Uptick. What does that mean?
Basically, what you're seeing in the economy is that we are improving. We went from a situation where we were in very dire straits to less worse to an actual strong recovery here in the U.S. now.
So strong recovery. So in your opinion, is the recession actually over?
I think it's difficult to say. You won't know until after it's passed. So as a result, you have to work on the assumption that you're still in it.
Okay, so for people who are watching, the question they're going to toss around their heads is, is now the time to change investment strategies? What do you say to that?
I think it may. My primary focus would be to encourage people to seek out an evaluation. We've gone through a tremendous decline in the stock market starting in 2008. We had a very strong recovery in 2009, and we've had a very painful correction in the last 4 or 5 weeks. So I would advocate that if you haven't had an evaluation, it's probably time to get one.
So let's have you actually break down the different types of investments between the annuities and mutual funds, investment accounts, and IRAs. Tell us the difference between a lot of those, and what do you recommend? Or is it different for everybody in general?
I think it's different things for different people, although the primary focus is really all about risk and management of that risk and guarantees. Part of my job as a planner is to be a personal shopper, if you will, to bring you to a financial supermarket and be familiar enough with you and your tastes and your likes to be able to pick items off the shelves that meet your needs and do it for value.
Okay, so you're going to kind of cater to what I need and what I want.
Exactly.
What are some of the things we should keep in mind if I were to come to you and say, listen, I have a 401k and I have an IRA, but I'm thinking I want something else. What would you say to me?
Well, one of the things that we use as a financial concept is really financial lasagna, and try to...
Oh, I love these food analogies over here, Andrew.
Just like a plate of lasagna, try to build a series of layers so that your wealth is exposed to different amounts of risk at different times.
Okay.
Should we go through a large economic downturn as we might be going through today, our retirement is not taken off the rails.
So what should we be thinking about in terms of saving for our retirement?
Certainly getting started as soon as possible.
Okay.
It's really time in the market, not market timing.
Okay. So like right now?
Best time to start was 20 years ago. Next best time to start is today.
So tell us a little bit about personal retirement safety nets. Exactly what is that?
A personal retirement safety net is a concept that we've broached using financial lasagna, keeping in mind that portions of your wealth are going to be exposed to different risks, so that you always have a safety net. So if we go through a period of time where you might find yourself displaced as a worker or retiring this year, there's a lot of uncertainty in the marketplace. Having a personal safety net in place will allow you to have more guarantees and maybe manage your risk a little bit better.
For people who are right now in retirement, any recommendations for them?
Again, I would argue it's evaluation.
Okay.
Taking a look at what your expenses are today, taking a look at the nest egg that you have or have left, and really sitting down with an advisor to do an evaluation so that you can put yourself on a track to run on. So
I'm going to come into your office and I'm going to sit with you, Andrew. What are some of the questions that I should ask myself before I actually get to your office?
Mainly, again, around risk.
Okay.
Are you a risk taker? Are you someone who can feel comfortable if the stock market goes up 50 points or 500 points or goes down 50 or 500? And to the extent that you answer those questions honestly, there's no judgment in our office.
Okay.
Answer those questions honestly about yourself. That helps us pick the right products off the shelf for you.
And Andrew, I said to you earlier, before, back in the day, before I actually was putting money in my 401k and my IRA, I was like, gosh, I can't afford to do that because I'll miss that money. But now that I've done it, now that I do it, I don't miss it.
You always miss it on the first paycheck. Beyond that, though, most people don't. And as they start to see some success, that account build, that breeds more success and people want to do it more.
That's right. All right. Well, thank you so very much for talking with us, Andrew.
Great to see you again.
All right, everyone. If you want to contact Andrew Wigzell at Barnum Financial Group, the information's on the screen. Their office is in Shelton, 203-513-6000. If you missed that, come to our website, WTNH.com, click on Connecticut Style, and we'll have the information there for you. Andrew, you've done it again.
Thank you very much.
You managed to inform me and make me hungry. Stay tuned. Much more Connecticut Style coming up right after this, everybody. Stick around. I want lasagna.